Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, September 25th, 2022. Hope you guys are having a fantastic weekend, and let's get started. The Bulls have just really they've had nothing to help them boost this market up at all, and it's been it's been really pretty tough for any kind of long side trades, but. As I've been saying, I can really only go off of what I see, and this was support right here. We had, we had bullish divergences in place. So that I can go by what the technicals are telling me, and that was saying right around that 3750 down to 3700 was where you want it to try and get long and simply put your stop below the 3620. We kind of tried to test it. We got down to 3641, but then we had an end of day, little rally, and we finished at 3693. It was down 64 points, but this is one of the reasons why I wasn't that upset with the close, because this was my support area that I was looking 3684. So I wasn't really trying to nickel and dime it. That's why I said the 3,700 for the second half of the entry. We went below it, which this is where I was saying I was getting a little uncomfortable with this trade, because if we broke through it, most likely we were going to see momentum really pick up down to the 3,250 range. So the fact that we went below it and then the Bulls actually had stepped in and brought us back above the 200-week moving average. It's something that we could lean off of, but like I said, this trade is it. Any kind of long trade that I do is a scalp long trade. I've been making that pretty clear that we're looking, we're looking to trade both sides of the market up or down, because we don't know what type of tolerance you have as far as trading. So we just put everything out. But the swing trade has always been, for the whole month of September, basically was going to be to short rallies. And that's still the safest way to do this right now. But if we go back to the daily chart, these are the reasons why I think that once we actually make this low, I'm not sure exactly where it is. I do believe we're going to get some kind of bounce up into this resistance area to test it. And then come back down, and this will be our long scalp trade that we get out of. But the fact that we have bullish divergences right here, so if we get a bounce and then we come down and get another panic low, I believe that it's actually when we go into October, there's probably going to be a 2 or 3 week rally that will take place and probably take the S&P up 300 points or more than that. So here's the hourly chart. We had bullish divergences in place that you can see that these kind of got wiped out right here. So we may have to make another set of them, meaning that we may have to come down, test the 36, 34 or these lows, and then from there get the bullish divergences, the second set of bullish divergences on the hourly chart. But we have them right now. We had them at least. We have bullish divergences on the daily. So that's these are kind of my reasonings on why I'm looking up or saying be very careful shorting right now. Now I'll be the first one to say that this momentum picked up on the downside a little bit faster than I was anticipating, but this was the support area. So, seeing a bounce to test the 50-day or even the 200-day moving average, and seeing how that holds would make more sense, where we get the bounce and then come back down. And what we're going to be seeing a series of is lower lows and lower highs, and we continue to just keep going in a downtrending channel. So leave. I would leave the stop right there, just because it's a risky trade right now. If the bulls open up tomorrow, let's say to try to move the price higher, the first area of resistance is going to be this 37, this open gap right here at the 3750. But really, more importantly, it's going to be in between the 3789 and really up to the 38.89. So this is the resistance zone that the bulls need to get above. If they do, then we start closing some of these other gaps. But until they can get over this resistance zone, the bears are going to continue to try to press the tape lower. 15-minute chart. Here you can see bullish divergences again. So there's a lot of reasons to be looking for a bounce. And like I said, the bullish divergences on just about all time frames. We are at some pretty good support too. it has me thinking that we're going to be, getting some kind of bounce. Now, this is the VIX chart. I've been showing you this little triangle. We made it right to the top of it. Remember when we were up here and I was saying, you don't want to be looking too short up here because we had bearish divergences and the VIX was due to come down. Well, now we had bullish divergences. The VIX went up. We're at the bottom of this top of the triangle. So if it's going to come down and test it, we could see the VIX trading back down near the 20. And if that happens, then what happens is we're going to see the indexes run. Now, if we take these highs out and start doing it, then it's going to be breaking out of this triangle to the upside. And most likely there's still going to be some more pain in the cards for the bulls. But right now, where things are lining up, the pieces of the puzzle for some type of bounce. And like I said, the bounce that I'm looking for is really only taking us somewhere up into the 38, 40 level, but more realistic is going to be somewhere up into the 3900 or 3960. So that's the trade I'm looking for right now. Let's see if it plays out. Leave your stop in place. This is not was not an easy entry on this because of the panic that we saw set in, but the momentum indicators are telling us that the rate of change on the downside is slowing and they're diverging from our from what the market's actually doing. So let's see what plays out tomorrow. Enjoy the rest of your weekend, and I'll talk to you guys in the morning.